My name is Troy. I'll be presenting. As we get going, let's do a quick systems check just to make sure everything is up and running properly. If you would, type OK in the chat box to let me know that you're hearing me clearly and seeing my screen okay. Okay, great. Looks like we're up and running fine. Thank you. If anyone has any technical issues as we go along, please let me know. As we get going, also keep in mind that all trades have risk. No one trade is guaranteed to profit. I think we all understand that. But in some way, you want to manage your risk in a way that makes sense for your balance and for your risk tolerance. So whether you use stop loss marks or hedge positions potentially set up to cover risk in opposite direction of your initial move, or maybe you're using AvaProtect, which is an advanced feature only available on our web trader platform and our AvaTrade Go mobile app. AvaProtect allows you to protect against losses for defined time periods for a small premium cost. So there are different ways to manage risk, but in some way, obviously, it makes sense to do so. And keep in mind as we go through from an educational perspective, some different ideas and concepts for technical analysis, that it's not meant to be financial advisement, but is coming, like I said, from an educational perspective. What is technical analysis? Real quick, before we get on the live charts. Basically, it's looking at the historical movements on usually candlestick charts to find patterns, repetitive tendencies that hopefully can help you predict with better accuracy future movements. And so we look for important price levels, important trends in order to identify maybe opportunistic locations to enter into and exit out of trades. And so there are different ways to do technical analysis. Usually we're using manual methods within the webinars, meaning we're drawing our own support levels, our own resistance levels, our own trend lines, etc. And in combination with understanding the fundamental news situation, using that technical analysis to find those entry points and exit points that we prefer. Sometimes we'll use indicators. Indicators are good at maybe helping to confirm an idea you already believe is an appropriate move. If you're relying only on indicators to tell you when to buy or sell, you might not have as much success as you would if you were also kind of understanding the fundamental news situation and also understanding the price levels yourself. So we tend to focus more on the manual methods so you actually can understand what it is the indicator is looking at as well, because just like the indicator, we're looking back at the candlesticks and looking for patterns and trying to find proper entry points based on some rules that we may outline as we go over the charts. And the weakness of the indicator is that it doesn't know how to take into account the fundamental news situation. And when we manually do our technical analysis, certainly we have that benefit of understanding what is happening around the world economically. Luzuko, we've started now. You're asking what time will the event start? Maybe your audio's on, not on, I don't know. Hopefully you're up and running fine. Let me just type a quick message. We've started. Check your setup. Okay. So let's take a look. What is happening in the news right now? Before we get into the technical analysis. So it only takes 5 minutes to do this, really. What's happening around the world? Vaccine rollout. I think we're all understanding that. U.S. stimulus. We've talked about it for several weeks now. It's coming soon. It's going to the House of Representatives for the second time for final approval tomorrow. And so likely there's about $2 trillion in stimulus coming to the world's largest economy, that being the U.S. economy. And so markets could really react between now and the signing of that stimulus bill. And we'll take a look at how we might be able to take advantage of that with entry points on the charts now and moving through tomorrow. And so usually stimulus is good for stocks and indices. So the equities, we could see rise in response to 1.9 trillion is the expected amount of stimulus, and it looks like they've got the votes to get it done. So the Senate forced them to pull out some of the measures that were in it, and now it's back to the House for what seems to be almost certain approval. And so that's boosting global economic outlook, according to this headline. Both the vaccine rollout, which has really ramped up. US, I think yesterday I saw an article, had the largest amount of vaccinations in a single day since the vaccine rollout began, and many other nations around the world as well are really ramping up the amount of vaccinations, and that can only be good news for opening up economies, and that's why that's creating optimism on the markets, according to this article on Reuters. Now, U.S. House to vote Wednesday, that's tomorrow, on nearly $2 trillion in this COVID-19 stimulus bill or package. And so that's also obviously in more than one headline there. Oil slips to $68. It's funny to say slips to $68 after it was so low, down below $10 a barrel, then 20, then 30, then 40, and obviously it's made quite a recovery, and even it was into the 70s if we take a look last week. So what made oil go flying up? 71.3 still it was on Monday. There were some fears about these Houthi forces that fired drones and missiles on Saudi Arabia. That caused a huge panic reaction that it could disrupt the oil supply, and price went flying up, not because there was any disruption in oil supply, but because of fear that there could be. And then now the article goes on to say that the price has pulled back down some because there's the realization that that did not disrupt much of any oil supply. And so it was an artificial rise on fear of disruption and not actual disruption of oil supply. And so we've seen oil pull back down some. That could create some opportunity leading into stimulus. Just real quick, what are your opinions? What do you think happens to oil as the stimulus package passes? What does that typically do for demand for oil and oil price if there's $2 trillion flooded into the economy? Do we think that's good for oil price or bad for oil price? Does it drive oil price up when there's $2 trillion of stimulus added to the U.S. economy, or do you think that would make oil prices drop? Yeah, I agree. Probably as a stimulus for oil, it increases demand if it increases economic output. And so more stimulus usually means more economic output, which usually means increased demand on oil, which usually means oil price up, right? Now, some of the rise in oil price that already occurred was it in anticipation of the stimulus. So you could say some of the increase in oil price is already there because everyone expected the stimulus to come. But if you happen to catch oil dropping from its highs and in a location that it makes sense to buy, it could make sense, right? Because the fundamentals are on our side that maybe oil could push back up again. So it's nice that if you're looking to go long on oil, it's nice that it pulled back from the high that it was at just yesterday. So we'll take a look at that. Real quick, I mentioned AvaProtect as a way to manage risk. And so it's AvaProtect you can find in two different locations. You can find it on the AvaTrade Go mobile app, which if you point at trading platforms, go to AvaTrade Go. You can put this on your mobile device. It's in the Google Play Store, the Apple App Store, etc. And we'll look at the same features on the web trader real quick, but AvaProtect, if you see this gold shield, it means AvaProtect is available. It's available on gold, silver, and FX pairings. Maybe more instruments in the future, but for now on gold, silver, and the FX pairings, it protects against loss for a defined time period for a small charge. So it's something you might be interested in as part of your risk management plan. And you see the take profit stop loss features. They calculate your exposure and your potential profit for you. It also calculates your margin requirements for you as you set up your trades. So it's the same on the web trader. So I'll show you that on a full screen view. So if you log in from our main website, you're in the web trader. And by the way, the web trader itself works like a mobile app. So if you use your mobile device and you don't have the AvaTrade Go mobile app yet on your phone, you can just log in from our main website with your mobile device, and the web trader functions perfectly on a mobile device. So you can use the app, or you can just log in from the website on the web trader. And what you'll see is if you put gold, silver, or FX pairings, doesn't matter which, you'll see that if you're buying or selling on any of those instruments, the gold shield, you'll see Ava Protect. And let's say I wanted to trade, I don't know, 15 ounces of gold. Tells you the lot size, tells you how many units of the instrument are there. This is 15 ounces, 0.15 lot. Here's my margin impact calculated for me. That's what I need available in my balance to open the trade. That's how much will go to margin. And it's converted to my account currency. If I put a stop loss, price is at 1718. Maybe I think it won't drop below 1700. If I say 1690 for my stop loss, if I can actually type 1690, there we are. So around 1690, I'm risking $426 or so, 427. By the second, it's adjusting to as the price moves. This is my risk to my stop loss. And maybe I look at my account and I say, wow, I'm risking a quarter of my account approximately. Maybe I decide I want to only do 5 ounces. And now I see immediately, okay, now I'm risking 141 and change. And so easy to do risk management. In lieu of a stop loss, I could say Ava Protect. I'll protect myself through the announcement of the stimulus tomorrow, through the vote in the House. What do you think happens to gold if the stimulus passes, which it looks like it will? Does that drive gold up or down, do you think? And think about gold as an inflation safe haven. Gold as an inflation safe haven. What happens to inflation if 2 trillion in stimulus is handed out? Does that create inflation fears? Potentially, right? If you hand out 2 trillion, you print $2 trillion and hand it out for free, that certainly could weaken the currency and lead to inflation fears. And so gold could go rushing up. So I could protect my gold trade through the vote tomorrow. I can protect by the hour. I can also protect by the day. I can get to 5 p.m. New York time tomorrow. Okay, for $40, I can cover that trade. For $40, it's like almost free, right? That's my total risk for a full day. I can do 2 days for $55. I kind of like that idea. So I could even say, what if I want to do more? I could do 8 ounces, 9 ounces, 10 ounces for about $100 risk. Okay, so as a simulation, let's say I also put a take profit maybe up at, I don't know, 1790. Okay, 1790 or so. And I decide, okay, I'm going to buy on that. So what happens? Immediately, 109 just came out of my balance, right? 109, because that's my premium cost. Whether I win or lose, I paid a premium. But now I can wait 2 whole days with no risk. No further risk for those 2 days. Doesn't matter if it drops $100 an ounce. I don't lose a penny more. I paid my premium cost. I can wait 2 days, and if it goes up and it hits a price I like, I can manually close it at a profit. It can hit my take profit mark I programmed, and my potential profit is a lot more than I paid for the premium. Okay, so that's an option that you have with the web trader and with AvaTrade Go, is to put Ava Protect on your trades. And so my take profit, look at my potential profit, $717 potential profit. I only paid 100 or so for the protection for 2 days. Certainly that event tomorrow this stimulus being passed could drive up the price of gold. There's no guarantee, right? If it was guaranteed, I wouldn't need the protection. So there's no guarantee, but the fundamentals are kind of behind it. So, and you've got this extra protection. So that's the sort of thing you could do with WebTrader. Advanced features. There are other advanced features as well. For example, Trading Central on all live accounts. You've got technical analysis done for you. Signals right here. Price levels are drawn. The expected breakout move is indicated on the chart. It's got all the technical analysis, support and resistance levels outlined for you. And these signals come in all day long. Okay, you get fresh signals. You can switch to cryptocurrencies as well. Okay, fresh signals coming in, technical analysis done for you. If you like what you see, you agree with it, you can trade on it. So very cool features on the WebTrader and AvaTrade Go. Now let's get on the MT4 platform and take a look at what's happening. And so let's look at gold. I just simulated a gold trade without looking at the technical analysis, right? That was a purely fundamental move. Now let's look at the technical analysis and see, maybe we would have thought something different if we did the technical analysis about the timing of the trade. Now, in actuality, I can look at this and say, okay, I'm on this chart did not update. Let me see here. Nope, this is on last month. Looks like my MT4. I know what I did. I think I logged in on the wrong MT4. Give me 1 second. Okay, I'm going to cut off the screen for a second. And just give me a moment. I'm still with you. I'm still with you. The audio is still going. I'm just cutting off the screen. Let me check if maybe I can get into a different MT4. 1 moment. Apologies. I put the new version of the platform on because the old versions of the MT4 don't work anymore. And so there was no live feed into that one. And let me see here. Yes, now I'm good. So let me get this back on. I'm going to have the view of the screen back in just a moment. Okay, we're getting there. 1 moment. Okay, looks like the screen is back up, and now we've got the proper MT4 account showing. Apologies for that. And let me find my chat box. One moment. Okay, good to go. All right, so we're looking at gold, and what we see here is there actually is a nice support level at the spot where the price is now. And so if we take a look, the 1 week candle shows a support level that has held still. And so as we look at the 1 week candles, we see resistance here. We looked at this last week, by the way, and it still did not break past our stop loss. Our proposed stop loss was down below these wicks, just below the support level on the 1 week candles. And so if your stop loss was down here, technically speaking, this is a resistance level in the 1 week candles, which becomes support here. It tested it and went back up. So the move we proposed on the web trader was a buy move. Now you see I can't put Ava Protect from the MT4, right? So from the web trader, you can put that protection on if you want. Here, when you do a market move, you don't have that option, but certainly I could buy from this support level and put my stop loss down here where we drew that line, which is below the support level, and your take profit can be up at the next resistance level, which would be about an equal risk. This is an old support here where it bounced up. It broke below that, so that could be resistance. So that's like a even risk to reward setup. If you believe that this huge stimulus that's coming could drive gold up even further, we talked about in the web trader when I placed that, when I simulated that trade, that perhaps it could go up towards 1800, which then I think I put 1790. So this is an old support level here. So perhaps somewhere in this area, you decide that that's a spot where you might want to take profit. Now you've got a bit more potential profit compared to risk, but that's obviously up to you, what price levels you like the most. But as long as you recognize the support and resistance levels, then you pick a spot that you think is opportunistic to try and take a profit. And I think this little resistance here could be something that could slow down where it hit and dropped in the past, could be something that would slow down the rise if it goes rushing up on the 1 week candles. So that could be a spot that makes sense to potentially get in. Now let's take a look maybe at crude oil, as we talked about that. And when we look at crude oil on the 1 week candles, we can see, wow, that was predictable. We've got the resistance level here that once it broke through, it rose up a few more dollars. And now we see the pullback in the price here. And it's back below that resistance level. It dropped below that level. So it looks like it potentially could drop down further, but let's zoom in and see, has it reached any support? Now, as we look at 4-hour candles, I can drag this line down, and this is called taking an outside in look. We see that there's resistance here, that it dropped down, that it had broken through, and now it's dropped below this old resistance, back below it. And the spot where this could slow even further, it did. Okay, it already, you see the wick here, oil hit this price and bounced. Why did I draw the line here? Not because it's the bottom of the wick, but because it is the resistance level right here. This is the old resistance on the 4-hour candles. Resistance, 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 right around 63 and change. And then we see it took huge momentum to break above that. Look at the size of this candle. And then once it broke above, it dropped back down, and that became support. We see here 1, 2, 3 4-hour candles testing it, and it went rushing back up. So it was an old resistance here. It becomes support at the same price, and it confirmed the support right here. Now, why might this be an opportunistic spot to potentially buy on oil? We talked about it, right? If we find a support level, which we did, it's bouncing. We see a wick bouncing, the red candle bouncing off this support. If we find a support level, maybe we trust it because there's stimulus almost assuredly passing tomorrow out of the US, which we all agreed before we looked at the chart that 2 trillion in stimulus or 1.9 trillion in stimulus probably should create some bullishness for oil. Okay, there's no guarantee, but this technical analysis makes sense to buy from just above the support level, and you get your stop loss down here. Okay, stop loss is below the support. Take profit. Maybe 2 trillion in stimulus is enough to drive it back up to this resistance level up here. Okay, there's resistance here. That just occurred today, 8 hours ago. It hit this price and dropped. So there's no reason why it couldn't return to that price. So a short-term move, stop loss below this support, take profit at the first resistance. If you're in it for more of a longer-term move, maybe you say, I'll put my take profit up at the all-time high, this year's all-time high, I should say. Certainly not an all-time high for crude oil, but the all-time high this year, up here around 68 or so, which this occurred just yesterday. So if we're up near this high of the year, now you have a much larger potential profit compared to risk. Okay. And then you could say, well, maybe I put my stop loss not just below one support level, but below two support levels. It would have to break this support level and then break this support level, this old resistance, before it hits my stop loss. That's called widening the strike zone. Okay, widening the strike zone. So by doing that, I'm able to stick with it if it just tests this support and breaks it a little and then goes rushing back up, which many times can happen. So the key here is don't take too big of a trade size if putting your stop loss below 1, 2 support levels creates too much risk for you. If by widening the strike zone, by putting your stop loss below 2 support levels, you say, well, it's too far away, now I'm risking too much. Well, then I would take a smaller trade so that you can put the stop loss at a spot that, according to the technical analysis, makes sense to you without overextending your account. So you want to decide, do you want your stop loss below 1 support level or below 2? And that really depends on whether you're a short-term trader, just trying to get a quick movement in and out, or if you're a longer-term trader where you're waiting maybe several days to reach your take profit. And so typically, if you're going to try and break through a resistance level and get to the second one before you take profit, then you might think about the same for your stop loss, that it would have to break through not just 1 support level, but 2 before it would hit your stop loss. So you're giving your take profit as much chance as you are trying to prevent your stop loss from being hit. That's one way to look at that or go about it. I apologize if you're asking questions right now. My question box, when I froze the screen a moment ago and then put it back on, the question box has disappeared on me. I'm sure it's minimized somewhere on my screen, but currently I'm not seeing it. And so I apologize if you've asked some questions or asked for a specific instrument. I'm not able to see your comments at the moment. I apologize. So this looks like a great opportunistic entry point for oil if you're bullish on oil with the stimulus coming, because the technical analysis is great. That's a nice support level. You don't have to risk much to be below it. It's already bouncing up off that support, and you have a much greater potential profit to even to the first resistance level, and even more so to the second resistance level. Okay. And once you're far enough in profit, if it gets near the first resistance, you could do a partial close, take some of the profit, and then have your take profit programmed at the higher level in case the rest of whatever you leave open continues that direction. And if you're not sure how to do a partial close, you just right click over the open trade, go to modify or delete, switch it from modify to market execution. Now all I have to do is, before I click close, change the trade size. So I could close half of it if I want. 0.10. Now it shows right here, close, order number, buy 0.10. So I'm closing 0.10 right now. Close from this order number 0.10. So you'll see when I close this, I pocket half the profit and half the trade will still be open because I'm closing half of it. Okay, so I just took about $2 profit and half the trade is open now. Now, obviously, I wouldn't have closed it yet. I believe in this move, right? Or else you don't open it. And likely, if it was up near this resistance, that would have been a spot I might do a partial close. But I wanted to simulate for you how to do it. So I did that a bit early with the partial close. But the same concept. When it gets where you like it, if you say, boy, I think it'll keep going, but I want to pocket some of my profit, that's how you do a partial close. Okay, and I could do a partial close again and close whatever portion of what's left. Okay, I don't have to just do two shots at it. I could close 0.0 something of this 0.1 that's open as an example. Okay, let's take a look at maybe one of the indices. We expect some movement. And by the way, just because it's stimulus coming out of the US, it doesn't mean that it won't affect other countries' instruments. And so we already see the China 50 climbing on the 4-hour candles. Let's look 1 hour. Look at this climb. That's also being rallied up because of excitement, anticipation of large stimulus. It creates global momentum, not just on the US indices. So we can see resistance levels being challenged. Here's a resistance level here, and you see it's looking to break through. We can look at maybe the FTSE, same thing, a lot of momentum up. We see this here, up, 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 up. Let's look at the US indices. Here's the FTSE 100. That's actually the one I was looking for. And we see upward momentum. Not as strong necessarily as the US indices have been rising, but it's upward momentum. And so you see the trend. If we look at the Nasdaq, look at that. Makes sense. It's a US indice. It's really got momentum and it's got stimulus coming. The tech stocks, by the way, are helping to drive this, the Nasdaq up, the US Tech 100. And so here's the resistance level, and it already blew through it. Probably the China 50 has potential to follow. It was at the China 50s at the resistance. It didn't break it yet. Nasdaq already blew through its resistance level. Okay, so if you're looking to trade on the Nasdaq, you could say, okay, where's the next resistance level? And so you could picture the Nasdaq easily rising up to this resistance level here where it plunged from not that long ago. Okay, looking at the 4-hour candles. So even though it's at a high point, you easily could say, wow, I think that's a lot of momentum. Maybe I buy in the Nasdaq, I put my stop loss below the broken resistance that it just broke through. It just broke this resistance. Why should it go back below it? And I put my take profit at the just before the next resistance level. So my potential profit is double what I'm risking. And I'm going with the momentum, with the fundamental news of stimulus coming. And you think with that momentum, why should it reverse and break the support level and hit my stop loss? If it does, okay, you take a measured risk, right? But you've got your stop loss below the resistance level that it just broke through. So that should act as support, theoretically speaking. And if this rises like it dropped, look how it dropped like a rock straight down in this zone. Many times that's indicative of what the return move has the potential to do. So this type of rapid drop, it broke through the resistance. It could easily have that kind of rapid return towards this resistance level. No guarantee, but again, trading is not about guarantees. And let's say you get halfway there, you could do a partial close again. Okay, you can do a partial close. The Nasdaq's already popping up for us for a nice little profit. If you're a scalper, You could have taken a larger size position and already closed in and out real quick, trusting that support level when the momentum's on your side for the moment. Okay. The DAX looks the same, and US 500, same thing, testing the resistance up here. US 30 at all-time highs today. And this one, I don't just mean this year, I mean all-time highs. We look at 1 day, 1 week, nothing was ever higher than what it reached today. And so the question is, will it pull back? Will it drop? Maybe this is a good spot for a pending order to say, okay, if it drops to this support level here, then I buy. Or if it drops to a lower support level, maybe here or here, maybe that's where you like to buy. So that's up to each individual trader, right? And maybe you say, okay, I'll do a pending order on the US 30. I'll switch to pending order. I'm going to go with the fundamental news with the stimulus coming. I'm hoping for an opportunistic pullback if I'm doing a pending order from down lower. That's the buy limit pending order, by the way, buy limit. And at price, I just drew a line, 31,850 or so. And stop loss would be below either that support or the next one. Maybe you'd go below 2 support levels. So 31,745 potentially. Okay, so there's an example of a pending order. The entry price is just below this red line I drew. Okay, there's the entry price. Let me get rid of this red line. That was the support level. And now I can put the entry price for the buy limit where I wanted it. Okay, so if we get a pullback, maybe that's a spot you'd want to buy from, and then you put your stop loss below 2 support levels. Here's one support level. Here's the next one right here. I'll draw a red line for that support level. There was old resistance. There's the resistance, and it dropped. Once it went above, it became support. Same price, resistance here, support here. And so this could just keep climbing, right? You might not get the opportunity, but we already jumped in on the Nasdaq in the simulation on the US Tech 100 trade. So maybe you get in market move on one, you wait for a better entry point in case there's a pullback on the other one. But that's up to each individual trader, exact aggressiveness or patience that you have, as long as you understand where the support and resistance levels are, what you're risking. And by the way, the web trader, obviously, if you're using the web trader or AvaTrade Go to open the trades, you know exactly what you're risking, calculated to the penny, because it calculates it for you before you ever buy or sell if you put your stop loss and take profit prices. So many times you might do your charting on the MT4, but also have the other platform open as well, like I do. So I could do my charting on the MT4 if I prefer that, if that's what I'm comfortable with. And then I can go back to the web trader to place my trades, because the order window is more informative than the MT4. And I like the charts on the web trader as well. They work very well. Okay, so I think we'll stop here. We've gone over the key instruments that you might expect to have really large movement over the rest of today and through tomorrow through the signing of the stimulus. So keep an eye on the indices, maybe some individual stocks if you have interest. Crude oil and gold, really big movers. Obviously the currencies, you can look at those. We just didn't have time to do that now. The currencies could be big movers as well. So have an eye on any pairings with the USD, and you could see a weakening of the USD, right? If the stimulus passes like we expect it to pass. So maybe you see the euro gain against the USD, but it already did today. Keep that in mind. You might be waiting for pullbacks on the euro USD. So real quick, euro USD, 1 hour candles, we see that the climb already occurred today. The euro already gained against the USD. So maybe you're waiting for a pullback to a support level in order to go against what could be a weakening USD with the stimulus being passed tomorrow, or with the anticipation of the stimulus being passed. And the same with the pound. We see the pound gained on the USD today dramatically. And you could try to pick your spots for where you might like an entry point. If you think the USD might weaken further, you could be going long on the pound. Maybe you're waiting for a pullback to a support level that you might like, or maybe you just jump in if you think it could just continue. And we see the Nasdaq's looking well for us. We're already up over 66 or so. So that could end up a very good move that we simulated there. All right, everybody, thank you for joining. I apologize again. I'm not seeing your questions, and I didn't want to delay things anymore after switching the screen on and off to search for where my little box is hiding to see the comments. But thank you for attending. I hope you enjoyed the session, and we'll be back at it on Thursday at our usual time as well, 11 a.m. GMT time on Thursday. All right, thanks everybody for joining. Bye for now.